It's water. I'm gonna say, you gonna share or?
Leadership in LA.
Yes.
And
Workshops.
Oh, it might have been down the next one.
budget.
Come down to MLA. No, we have to go in here for part two.
Right here.
Maybe. Okay. Now then. I gotta go in there again. Oh, no, good. Got it. Full size it and start.
Hi, my name is Cindy Kendall, and I'll be presenting a more in-depth discussion about budget and finance as part of the Municipal Leadership Academy for Part 2. We have encouraged you to do this presentation, perhaps with some of your other council people, and maybe an open work session. So as a result, I'm going to hit some of the basics, but we're going to definitely hit more of the detail as we go through. First of all, we want to talk about how goal setting is so very important and being able to prioritize the things that you want to get done for your community. And we're advocating that this be done before you even start budget. Budget is a means by which you can execute that plan. So you would need to have that framework done before the budget season, which we're in right now. And as you know, coming in after the 1st of January, the new council will be in their position. Usually, goal setting or a capital improvement plan looks out 3 to 5 years. And that allows you to do some planning. It allows you to smooth some of the projects. It may allow you to stagger some of the expenses. It may also help with the staff management if they know what's going to be happening in a sequential basis over the next 3 to 5 years. But one caution that we would give you is don't budget and have this as your only time that you do planning. Because during the budget season itself, you'll see that many times you're so focused on trying to get it balanced that you really are making decisions on the short term that may not be comfortable or may not be the best thing for your community in the future. Budgeting is a plan. If you were at the MLA sessions number 1, you heard me talk about the plan. It's a plan on how to achieve the goals of your community. Not just what 1 or 2 council persons want to do, but what's going to be the best for the community. It's also going to be an opportunity to make sure that you're using your resources the best way that you can for the next year. And those resources, we want to remind you, are not only the employees of the city, but also the volunteers are so critical to steering the community in the activities that they are very interested in. And besides that, many times it's almost free labor. And it also gives people ownership into what's going on into their community. So those volunteers are very critical. It'll also give you an opportunity to take care of your equipment and your buildings. You're going to have an opportunity to see what your revenues and what your resources are going to be able to fit into versus what your expenditures are going to be demanding. Are you going to have to cut expenditures? Are you going to have to be able to cut programs? Or do you have room that you'll be able to pull in some additional revenues? And don't forget that if you have outstanding debt, you're going to make sure that you honor that obligation and make sure that gets retired regardless what kind of debt it is. And we'll go through the different kinds of debt today. Also use your budget as an opportunity to communicate with others. We're talking about having a public hearing meeting so that you get a chance to hear from the citizens, but it's also a very important document that you communicate with the staff so that they know what's going to be expected throughout this next year. It's also an opportunity for you to do some monitoring. And there's going to be a time when the council is going to have to say, well, we need to amend that budget. because either the revenues aren't coming in as expected, or maybe they are, or maybe the expenses are coming in a little bit higher than you expected. Maybe you've had some change orders. Maybe the weather has just gone bad this winter. Those are all things that you're going to have to be monitoring as we go forward into this budget season. And you're going to have to get that all taken care of and the monitoring done before you spend what was announced through the public hearing notice. The other thing that's kind of touchy is the timing of an amendment, because it also requires public hearings. And so there's going to be a window of opportunity where we're going to have publication before the public hearing, before the amendment is effective. But budgeting is certainly a balancing act. You have to balance those resources against the demands or the expenditures. You're going to have to initiate some cooperation. Maybe there's going to be cooperation between you and the township trustee fire departments, or maybe it's going to be between you and the county, or maybe between the city and the school system, or maybe it's just cooperation and between the city council and the staff. We want to also make sure that with that cooperation comes a great deal of communication. Sometimes things are just misunderstood or not fully communicated, and by taking care of that communication issue, it takes care of the fiscal issue as well. Now, this is a form that your city clerk or your finance officer will be able to give you as part of the budget packet that we have to submit to the state. But for right now, I'd like to go through a few of those columns and explain how it works vertically as well as horizontally. Let's start out with the columns. You see that column C is for the general fund, where column D is for special revenues, and so on as we read from left to right. Those are going to be fund types, and we're going to talk about each one of those and what the requirements are for each of those fund types in a little bit. Then if you look at your horizontal lines, you'll see on this particular form anyway, that the top half of the page deals with the different types of revenues that we have. About 3/4 of the way down, we're talking about the different categories or programs of expenditures and other financing uses. And then down on the very bottom, we talk about what your beginning and ending cash balance is if all of these plans come out exactly perfect. So keep this in mind, or maybe you want to take it out of your handouts so that you can refer to it as we go through the different things on fund types and programs. So that general fund, as you can see here, it's a pretty decent bucket because it's the chief operating fund of the city. This is where you're going to see the majority of the services that your citizens demand of you and that are being paid for from property taxes. The special revenue category is called special because there is a specific source from which you receive this money, and it has strings attached because it can only be used for a specific purpose. Now, some of those things are shown here. Your road use tax is only street related. Employee benefits, if you levy for that, then it's going to be used specifically for that. The emergency levy, again, it can only be used for and receipted in a specific way. Local option sales tax, some of you, in fact, most of you probably have local option tax. You need to know what was on that ballot because that ballot is going to tell you exactly how you're going to spend it. And by the way, council, you can't change that unless you have another election. So you want to make sure that you are in compliance with that. The last one we have here is tax increment financing. And we'll go into a little bit more of that, but let's just remember that tax increment financing is only for those items that are included in the city's urban renewal plan and that are only obligated by the council. So it's not a pot of money that we can move around and use it for other purposes. Now, again, we're still going to the right on that form, and we're going to talk about debt service, which is where you're going to be paying only the principal and interest payments on general obligation bonds that your city has borrowed. The capital projects fund is the next one on that form, and that's where you're going to be able to see large projects accounted for. And one of the reasons that there's a special column for it is because multiple years are needed to do most projects in Iowa, especially if they're large construction projects. There are also a good chance that there are multiple funding sources. So that's one way that you can segregate it and keep it into that one pot. The permanent fund, this is usually associated with perpetual care for cemeteries, where a certain amount of money is set back as principal that can only be used for the maintenance on your cemetery, or perhaps someone has given the city an endowment for a library or a park or a swimming pool or something like that. That's also considered a permanent fund. Now, the last fund category that we're going to talk about are proprietary. Now, proprietary enterprise funds, utility funds, those are all the same thing. Business type fund is another acronym that's used for this, but these are self-supporting operations. That means that the revenues that they get for fees is what is going to support that activity. So your water fees should support your water activity. It has nothing to do with any of your other utilities. So with that, let's talk about the fact that each of these funds has a combination of the revenues and expenditures that are listed on this page. Some funds, like the general fund, will be very heavily reliant on property taxes, where your utility funds are going to be more reliant on the charges for services. Most of those funds are also going to have personnel expenses, wages and benefits, training, those kinds of things. But you'll probably also see that they have their own equipment that's necessary to provide that service. And there may be some projects in there whereby maybe you're doing a sewer project or a water main project. So they can have any combination of these things, but you're going to have just as many resources as you have expenditures. So let's look at the city's revenue cycle. It, again, makes it unique from the private sector in that we have a fiscal year that starts July 1 and ends June 30. So it is starting in the middle of the construction season and it ends before the construction season is over. So that's one thing that makes it unique. It is not the same fiscal year that the federal government has. So sometimes if you have a federal grant, you'll have a conflict between the fiscal year that we use for cities and the federal fiscal year. Another conflict sometimes is with your utilities. They may be on a calendar year. So, but for our discussions today, we're going to talk about the fiscal year being from July until June. Now, most of the revenues for your sewers and so on and so forth and your expenditures are going to come throughout the year, as you can see by that arrow there. However, one of the major revenues, again, I repeat this over and over again because property taxes is pretty much what the council has an opportunity to ask for and to control. But they come in at a funny cycle. As you can see, the September property taxes probably don't come into the city until October. And then again in the spring when our property taxes are due, they get to the city in about 30 days. So as far as the property taxes is concerned, there's some geeks in there. And so you need to be able to have some cash flow in between the lean months and those months when you receive large amounts of revenue. Whereas the rest of the year, utility fees and those kinds of things are pretty static. So let's talk about some of the revenues and the resources that we have. And how can you use them in your budget? Our first recommendation is to always be conservative. If there is a high or low range that is estimated to be coming in, like we do sometimes for road use tax and things like that, always be conservative because it's easier to increase your activity during the fiscal year than it is to pull it back. Many times we base it on projections. And those projections, if we're doing budget in January of 2016, the fiscal year doesn't start till July of 2016, and it has to get us going all the way to June 30 of 2017. So our projections are pretty long range there. Sometimes what actually happened last year isn't going to happen this year. And we're going to talk about some of the property tax reform bill and how that's going to change over a period of time. And then of course there's going to be times when we need to make those those adjustments. Perhaps the gas tax that is used to calculate your road use tax. Maybe the gas is down low like it is right now. It may go up and it may have a large impact on the amount of gas that people are buying. So those are all variables that we have to consider as we estimate our revenues. So let's talk about some of those resources. The first one is going to be taxes. Now there are a number of taxes that cities use. Property tax, which again I'll go into a little more detail in the next couple of slides. Tax increment financing. Many cities may use tax increment financing to enhance their economic development, or perhaps they are using that to support the expansion of a business, or perhaps they're using that to promote housing in your community. Again, that's going to be discussed a little bit more in later slides. The hotel motel tax is by statute limited to 7%. If you have hotel motel tax, it's because of a referendum, and that referendum stipulated how much you're getting. The majority are at 5 or 6%. Very few are at that 7%. The last one listed on this screen for taxes is the local option sales tax. And again, that is dictated by the ballot. So if you don't know what's on that ballot when it was passed, that's something that you should ask your finance person or your clerk. They can get that information for you. So let's talk a little bit more about property taxes. Each of our properties are broken into one of the classes that is listed here. There's a couple more classes, but for our purposes today, let's just focus on these. In addition, as part of the Property Tax Reform Act, there is a rollback, and that rollback has been instituted on residential property for a long time. However, this year I am reflecting what that rollback is going to be at. So you can see that for residential, the rollback amount is at 56%. This year, we knew for the classifications is multi-residential, which has just recently been created. Commercial is now going to be rolled back by 90%. The industrial will be rolled back by 90%. And any ag land that you have in your community that's classified as ag land will be rolled back to 46%. Now that multi-residential, I said, was a new classification, and it has a characteristic of its very own. If you have nursing homes in your community, or if you have apartments above some of your retail downtown, if there's going to be 3 or more units, then they're going to be reclassified starting with fiscal year 17 as multi-residential, and they will have a unique rollback applied to them. For those parcels that were downtown that had the upstairs residential and the downstairs retail, 2 years ago that would have been that would have been rolled back at 95%. Last year it was rolled back at 90%. Now you're going to see that the multi-residential aspect of it is going to be rolled back to 86%. And then for the next 7 years or so, it's going to continue to roll back until 2024, where it will be equal to that residential. So let's go back. Right now the residential is at 56%. So you see we're going to be rolling back from 86 to about 56% over the course of this rollback schedule. So you need to know, what's that going to affect you as far as your taxability is concerned. So let's talk about how we calculate that tax revenue. And we're going to use the residential as an example for today. Let's say the assessed value, that's what's the closest to the market value, is $100,000. Okay? Then we're going to apply that rollback, or we call it a state limitation, saying that in order to calculate taxable valuation, you have to take the 56% rollback, so that the taxable valuation is going to be about $56,000, okay? So if you have that taxable valuation, how do you get down to how many tax dollars are going to come to the city coffers? That is a product of using the taxable property value against the total levy rate, and we'll talk about how the council will set that levy rate. It's a number of different pieces, and that's going to tell you how much property tax revenue you're going to be able to generate to run the services of your community. Now, some of the commonly used levies, there's the 810, the general fund levy. Now, many of you are probably at that 810 maximum. If you're not, then there's a good chance that you have high valuations in your community, or perhaps you have other means in which to support the services in your community. Now, if you're stuck at that 810 and you still need to have more tax revenue to run your programs, there are some other levies that are commonly used. This is not an exclusive list. If you used all of these and you still are looking for ways to raise taxes, there are a few more that we won't list here, but your clerk or your finance officer will be able to help you determine those. One of them is the emergency levy. Now, this is the levy that the council can use at their discretion, and they can levy up to 27 cents per $1,000 of taxable valuation. Another one would be for your property and liability insurance. Another one might be for employee benefits. Now, you can see here that the employee benefits are listed. So we have to make sure that any benefit that the council would want to give to the employees is allowed under the state code. Now, this cannot be used for any wages. The wages have to come out of that 810, the general fund, or out of road use tax funds. But the benefits could be an additional levy, some more property taxes that the council can levy. And let's not forget our debt service. If you have general obligation bonds, you have promised the full faith and credit of the citizens and their property to make sure that those principal and interest payments are made. So whatever you need for that property tax levy is what you have to levy. Again, unless you have an outside revenue source that can take care of that liability. But it's very critical that you fulfill your promises to pay back that principal and your interest. Now, we're going to talk about some of the horizontal lines on that form. We're going to talk about intergovernmental revenues. The first one on that list I'd like to go into a little bit of detail. It's called the backfill. Now, remember I told you that a couple of years ago we had a property tax reform bill, and that rolled back the commercial and the industrial property classes to 95 one year and then 90% the next year. But as part of the negotiation on that bill, the state agreed to pay us back the amount of revenue that we would be losing when they rolled back those valuations. So that rollback factor is very important to fulfilling a break-even point, shall we say, between what we would have generated before that reform bill passed and what we are able to generate right now. And hold that thought, because I've got some more information on that. Another intergovernmental fund might be from grants. The road use tax is a very common intergovernmental because that comes from the gas pump and through the licensing and things like that to the state, and then the state reapportions it to us on a per capita or on our population basis. So it's very important for some of these communities, especially in the metro area, who are now going through a special census. They're going to want to be able to prove that they have more people, therefore they would be able to increase the road use tax that they get. Libraries have open access, and they can receive some money from the state for some of those programs that they have. And don't forget, for those of you who have 28E agreements, that's a contract with the township fire agreement, that the townships will help pay towards some of the fire protection that you may offer, or maybe you're using the services of another city or another township. Those are 28E agreements, contracts in which you're going to exchange money for services. The next resource category is in the area of charges for services. Again, there may be some charges for services within your general fund. One that comes to mind is your library fees, things like that. Maybe your swimming pool. You have a swimming pool and you charge people to get in, or maybe you charge for some of your park and rec programs. But the ones that we usually think about are going to be in those enterprise funds, and where you set your water, your sewer, your garbage by ordinance. So those are the major charges for services that you're going to probably see, even though there are some that are generated in the general fund. So let's talk about that backfill a little bit more before we go on to the next topic. In 2015, fiscal 2015, that FY means fiscal year ending and then the year that it ends. So it's fiscal year ending 2015. The state rolled back the commercial and industrial and some other valuations. But the commercial and industrial and retail that was rolled back went to 95%, and the state said, we will give you that money back. We're going to backfill it. So the state approved an appropriation of $78 million, that's with an M, for all of the cities, the schools, and the counties to share. Okay? Then the next year, fiscal year 16, the rollback went to 90% for the commercial and industrial classifications of property. So the state appropriated $161 million for that backfill for the different taxing agencies. Now, based upon the change in the multi-residential and a couple of other modifications, we think that the estimate for fiscal year 17 will only be $153 million. Now, you'll notice that it's going down a little bit there. The real thing that I want to bring to your attention, Council, is that as of fiscal year 17, it's going to be frozen. They're not going to give us any more. So if it is going to come in at about $153 million, which is what our estimate is now, it will never be more than that. Okay? If you talk to some of our lobbyists, and if you listen to what's going on at the State House right now, they're very concerned about the revenues coming into the state and all the pressures on the state for different funding mechanisms. So we are concerned that we will even be able to get up to that $153 million. It's going to take legislation for that to change, but on the other hand, when there's financial pressures like that, the chances are that there will be some movement in that legislation. So we'll be monitoring that, and we would encourage you to talk to your legislators about that. So let's go on to a reminder that we need to always be conservative. If you don't need to budget all of that backfill because you think, well, maybe we're not going to get all of that this year, that's a conservative position. If the money comes in, then you can always make allowances for it. In the areas of use and money of property, conservative in our investment market right now is just absolutely critical. We hear rumors that the feds are going to improve the interest rate, which means your interest earnings are going to be increased. But again, don't count on that until it actually happens. So be conservative on those things. Licenses and permits, unless you institute a new fee structure, they're probably going to be pretty flat from year to year. You probably aren't going to get any real big activity changes in that revenue stream. And then there's always those miscellaneous things that you don't necessarily want to balance the budget on unless you know for sure that there is a concrete campaign going on for donations, for example. Because refunds and fines are very volatile from year to year. Okay, we do have one more category called other financing sources, and within that category there's three different revenues. Number one would be the transfers in. Now the state code and GASB, who are the Government Accounting Standards Board, do officer deposits money in one fund type or another. The emergency levy, for example, or the employee benefit levy, for example, have to be deposited as a special revenue because they've got such tight strings attached to them. But then they need to be moved to the general fund. So we call that a transfer in to the general fund. Additionally, maybe you have sold general obligation bonds for a sewer project because the interest rate on general obligations is so much better than it would be if it was a revenue bond. So you are going to pledge that the sewer fees are going to pay for those general obligation bonds. So you'll have a transfer into the debt service fund type. Another kind of transfer would be if you are doing tax increment financing projects. Perhaps the engineering was done on a project and you need to pay the bill, but because of the cycle for tax increment finance revenues to come into the city, it may lag for 12 to 18 months. So as a result, you have to have an inter-fund loan between maybe the general fund and the tax increment financing fund. So that's what this internal loan or internal transfer would be all about. And then, of course, if you borrow money, they want to be able to easily identify it. So it's got a line all by itself. So if you borrow money, then it goes into that proceeds of debt. And now that's if you borrow it on the muni market or if you borrow it from the local bank. It's all going to be identified on that blank on the form. And then if you sell capital assets. Now we're not talking about selling a little bit of scrap out of the street facility. But what we are talking about is if you sell a building or if sometimes communities will buy a new fire truck and sell the old one. That's where we would record that on our budgets. And usually that's pretty clear as to what that might be. So now that we've gone through the revenues on that, let's flip over here and see if you need to take a break. One of the values of having this recorded is if you need to take a break, either your brain or other bodily functions, this is the time you can stop the recording and maybe you want to talk with some of your counselors, your finance people about what kind of revenues you have in the community.
Okay.
But I won't stop. I'll let you stop that if you want to, and we will proceed on to the next segment, which is going to take care of the expenditures. Okay, so for our expenditures, again, if you look at that form that I supplied to you, you'll see 3/4 of the way down, we have different programs. Public safety and public works are the first two on that list. And you can see here that there are certain activities under each of those programs. That program total is very important because the statute says if you spend more than that, then you have to have an amendment. So we want to know that you have realistic numbers on your expenditure side, just like you have conservative numbers on your revenue side. But these are the activities within each of those programs. And you'll see that there are 7 different programs. Health and social services is one that not every community is going to have. Maybe you have more activity in Park and Rec than you would in a different community. But all of us, regardless of your population size, have all of these programs in which we could have activity, and the amount of activity is going to be a decision of the council. Community and economic development, this is where you'll reflect all of your urban renewal activity, for example. General government. For a smaller community, we see that this is a larger program because usually it's a part-time clerk that is the one running the city hall or has office hours. But there are other 2 programs that are still there are the debt service and the capital projects. Again, as we spoke earlier, those capital projects are probably going to cross over a couple of fiscal years, and they probably have a number of different revenue streams. Maybe you have to put in some seed money for a project, and then maybe you have a loan from the state revolving fund, and maybe you have a grant that's also going to help fund that project. So all of those those different revenue streams makes it easy to be able to monitor it through the capital projects fund type. And then there's the business type activities. Some communities spend a lot of time working through water and sewer projects, especially if the Department of Natural Resources has deemed that the effluent is an issue, or maybe you don't have the proper fluorination in your community or whatever. But this area is also one of those areas where we see the planning that we talked about on that first slide being so critical, because even though you may have a snapshot of how much you need for wages and benefits for this year, and the fact that you need to have gas to run the truck between the water main and the sewer plant, the point is that you have many, many infrastructure which is under the ground or above the ground if you've got an electric distribution system that needs to be considered for today, tomorrow, and the next day. So you're going to want to be able to account for those things on that long-term planning schedule, so that you know what kind of activities you need to have scheduled for the upcoming fiscal 17. Now there are some limits and some restrictions that the state imposes. First of all, the types of revenue that we have are restricted by the state. And the amount that is available through your levy is also restricted in many areas. Again, one of those limits is the 810. Your emergency is limited to 27 cents and things like that. There are some of them that are allowed to levy what you need, but be able to document what you need. It's not just a grab for tax dollars. Also, the amount that's available through hotel motel tax and the local options tax is limited by state statute. It's at 7% for hotel motel and 1% for the local option sales tax. There are certain state and federal requirements that we have that are mandated, and let's talk about some of those mandates. Because 9 out of 10 times they're unfunded. They're not going to give you the money to do it. They just tell you you have to do it. One of the biggest examples that many of us can share are some of the training requirements and certifications that are required for your police department, your water sewer operations. Another one of the mandates is the city share of the pensions. For 411 cities, that's up to 30% of compensated wages. For IPERS, it's not quite that much, but you do have a liability there. And oh, by the way, Council, if you haven't done so already, by the time you listen to this, make sure that you have made your declaration for participating in the IPERS program or not participating in the IPERS program. Again, your city clerk or finance officer can help you with that. So let's talk about some of the tricks of the trade when it comes to actually doing a budget. First of all, let's make sure that you have enough money to get you through the year. Remember, we talked about the fact that the property taxes don't come in. You may not know that you are going to have a main break on Main Street during the spring. So what are you going to have to do? You're going to have to dip into some of those reserves. For the general fund, the Government Finance Officers Association, which is a national association, has guidelines of 25% of the general fund revenues being a recommendation for fund balances. Again, that gets you through the lean times before those property taxes get in. It also gives you a little bit of a rainy day reserve for the situations that you may not anticipate, a storm, like in tornado or something like that. In those enterprise funds, again, because they have so many more expenses, their equipment is so much more expensive to replace, the fees that the council sets do need to be able to handle those emergencies as well. So by having things in reserves, you can take care of that ongoing maintenance, or you can take care of the emergency should a tornado hit, or a ice storm, or a hailstorm, or something like that. So reserves are very important. There is a constitutional provision that the city cannot use more than 5% of their assessed valuation in order to pay back general obligation bonds local option sales tax bonds, and most tax increment financing agreements. So you also want to make sure that you know how high what is that 5% in your community. Now, that's real easy to find because every year on the annual financial report, which was due December 1st, there is a calculation on that publication. So you'll be able to see what that is. And then you can also see in that same report what the outstanding bonds are and which ones would apply to this limit. But that's just something to keep in mind as you decide which projects you're going to do and what funding you're going to use. Are you going to borrow money? Then you need to make sure that you're not getting too close to that limit. Here's some more do's and don'ts. Do include training and maintenance. Again, supporting your staff so that they can do their jobs efficiently is very critical. Many of the staff are required to have training to get their certifications. Other staff receive training to make sure that they can help guide you. They can make sure the minutes are published in a timely manner and that the reports are done when they're supposed to be and things like that. Another one is don't use one-time revenues for ongoing programs. If you have someone that gives you a gift, you might want to think about what the ongoing maintenance might be on whatever you're going to use that money on. Maybe they're going to give you some park equipment. What's the ongoing maintenance on that? Do use tax increment financing carefully. Someone would even say wisely, because overuse can affect not only your general fund, but the general fund of the school and the county as well. It's a wonderful tool, but we want to make sure that it's used judiciously. So how are we going to be putting some of these pieces together? You're going to have to collect all of the information from staff, from maybe your boards and citizens, your library board, maybe the various departments that you have in your community, and your staff is going to have to be able to put that all together because they need to prepare for the public hearing notice and other documents that we need to make available to the citizens. Again, that is prescribed by state statute. Some of the ways that you can use to balance the budget, again, I repeat over and over again, but it's very important that you be conservative on your revenue estimates. Try to get your expenses as close as possible. Rounding things up to the next $1,000 is probably not going to give you a balanced budget without pulling teeth, because you're going to have to find out that you just don't have enough resources to have that kind of latitude. Are the enterprise funds supporting all of the activity in that utility? Again, you may have to do a rate analysis. Again, we would hope that that would not be as part of your budget, but maybe some of the preparation for your budget. Maybe it's going to be done next fall in preparation of the next year's budget, but you want to make sure that they are supporting their own utilities. You don't want any of those deficit ending cash balances. If you make cuts, make sure they're reasonable and attainable. It's very easy to say, off with their heads, but what is that going to do? That's not a methodical way of going through those cuts. Make cuts that are reasonable and that you will be able to sustain. The next point is, are the tax levies that you're using supporting the services that you want to support for your community? Or are there some adjustments you need to make on the revenue side? Or do you need to make the adjustments on the service side and the expenditures? Maybe you're not going to be able to have heated swimming pool bathrooms during the winter. Something, that maybe sounds that silly, maybe something that as new eyes are on the budget, you just come and say, well, is there some place that we could cut some of those services without damaging what we want to provide to our citizens? Now we're almost done. But the council must hold a public hearing, and there are special requirements for that publication and posting. If your community is 200 or more, you can post it. You don't have to put it in a newspaper, but anybody else has to put it in a newspaper. So you have to coordinate this timing mechanism with your newspaper. It can be published no less than 10 days before your public hearing, but no more than 20 days before your public hearing. So you're really going to have to get on a calendar and see when that's going to need to be done to fit into the timing of that publication. That might mean a couple of extra council meetings between now and the due date, which is March 15th. Go back and check, or just ask the clerk or finance officer, has the annual financial report and the urban renewal report been submitted on time, and were they accepted? They were due December 1st, but they need to be done before you're allowed to do that public hearing notice. One other requirement is that 20 days before the public hearing, you have to share all of the budget information with your citizens. Most ordinances require that that information be available at the city clerk's office, the mayor's office, and the library. No, you don't have those in your ordinance wherever the ordinance designates it. Sometimes it has to be at the post office or at the grocery store. It depends upon what's available in your community and what's in your ordinance. You might want to review that as well. This timing requires planning. Again, I talked about the planning with the newspaper. That includes the planning for when you're going to have council meetings, because this has got to be pretty much